Hey everyone, it's Evan here from the Trade Risk on Friday, August 11th here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off with some sector analysis. Feels good to be back. I've been on vacation for the past week or so. There's been no video updates, and we did get some movement here in the markets while I was gone. That's constructive to see. I like to see a little bit of volatility and not just sideways sleepy price action with a sub 10 VIX, and we definitely got a spike in the VIX. We definitely got some movement. So let's jump into it here. The S&P 500 SPY ETF. We're going to start on the weekly time frame. You can see we had a minus 1.33% down week, and this is actually just about the largest sell week all year. I think we had a minus 1.34% right in here on March of this year, but very close to one of the biggest selling weeks we saw, which again, 1% to the downside really from a historical standpoint isn't anything that extreme, but for 2017 it does make the top charts right now. More importantly though, you can see here that we did a very convincingly break below the past 3 weeks lows. We kind of had this look, we had this upside sort of breakout, this look up and failure type of action here where we've got a nice pop to new all-time highs. Those sold off, and we ultimately closed below the past 3 weeks of price movement to the upside or sideways action. So this is the weekly chart. You can see the 8 and 20 period moving average here. The fast moving averages are still up. They're still bullishly aligned. We are now closing below the 8 period EMA on the weekly chart. So some damage there below the past 3 weeks lows, something to take notice of. But again, the uptrend is still very much intact here on the weekly time frame. Now, if we go back down to the daily chart, we can see we opened up the week right here on Monday. It was basically business as usual. It was just sideways, very sleepy price action. And Tuesday ended up being that outside day where we had that break to new highs, large topping tail here that ultimately failed to hold those gains intraday, reversed, closed red on the day, and that basically kicked off this downside movement, which we saw weakness all the way into Friday's session, with Thursday being the real sort of technical damage day here with a minus 1.41% just on Thursday alone. So where does that leave us here? Well, first thing, note the 8 and 20 period starting to curl back over here on the daily chart. So you're starting to get a bearishly aligned sort of the faster momentum moving averages there. And importantly, like we discussed here on the weekly chart, we did break below all of this sideways consolidation. So this recent move that we broke out to highs here, so way back at the beginning of July when we broke sort of from this consolidation, this little channel here, we made a run to highs, we moved sideways, and now we're starting to roll over from that sideways range. So sellers in the near term are in control. That is designated by the break of support, the moving averages that are starting to curl over. But if we zoom out here, take a look at this yellow, this trend line that is extending all the way from the beginning of the year. So from January of 2017, we've had this trend line in place that has supported this uptrend all year. And you can see we're testing it right now. That's exactly where we sold into on Thursday. And you can see on Friday, we basically stalled out and just moved sideways. So going into next week, we really want to sort of pay attention to this trend line, this slope, because if this starts to break down, that is going to be a change of character from a larger picture sort of trend basis here. It doesn't mean we have to have this huge correction doomsday scenario of minus 10, 20, 30%. It just means that buying pressure is weakening as we've extended this rally up. And now if we break below this trend line convincingly, spend some time below it, you definitely have something to pay attention to, something very objectively just to measure the rate of sort of acceleration of this trend all year is now changing a bit, is weakening, is potentially reversing, and that again depends on your time frame and strategy on how you can adjust to that. So I think this trend line is important. I think this 240 level, these were the lows from July. If we continue to see selling pressure, that's only 4 points from here, so that's about another 2% or so. But if we start to, continue this sell-off, we break below this trend line, 240, that's going to be a very logical sort of a level to sort of pay attention to there. That, again, is the lows from July and then the highs back here from March, April, and May. So that's the SPY on sort of that daily and weekly basis. You can see we did get that uptick in volume here on Thursday of this week, and hand in hand with this is volatility. And we mentioned the VIX at the top of this video. Let's look at the VIX because we had an extremely large pop in it this week. Take a look at here the weekly chart. You can see we get a 60% move in the VIX. So we went from basically a sub 10 handle here. We had a 9 handle on this to start at the beginning of the week, and we ended at a 16 VIX here, so plus 6.60%. That's a very meaningful sort of pop there, and it's going to be very interesting to see, is this a start, something that accelerates, gets us back to maybe even 20, something we haven't seen in forever, or is this just another great attempt or another great move to fade, jump on those XIV longs again, and ride the short volatility into the end of August. We'll have to see how that acts heading into next week, but we got a spike in the VIX. We did get this drop in the SPY for a 60% pop in the VIX. Not a whole lot of down movement. Again, only minus 1%, so that's pretty interesting there. But something to pay attention to, of course. We are pricing in. We are getting some protection priced in there, and the market is very anxious on even just the small drops here to rush out of the market there, get that protection. And granted, it is coming from a 10 VIX, which is very historically on the low side. So a 50-60% move, you could argue just brings it back into normal sort of, 15 or so trading VIX. So that's enough there on the VIX. Let's get into some of these other markets. We're going to move into the IWM, which I think is at a pretty interesting point here. If we zoom out, again, basically this trend line extending from the end of 2016, but this upward channel that we've sort of been grinding along in for the past 7 or 8 months this year, we're now at the bottom end. We're just hanging out here, very similar to the SPY, where we saw that trend line, although the SPY trend line is of course had a little more positive slope to it. This one here is just hanging out right at this 136 level. You can see there's more price structural support down around 134, but it's going to be interesting to pay attention to, again, just to see, do we get follow through? Are we going to start breaking through some of these trend lines in the IWM, in the SPY? The IWM did lead to the downside this week, minus 2.7%. And if we go to the daily chart, notice here, it's really been selling off pretty strong for the past couple of weeks. The S&P 500, and we'll look at the Qs in a minute, are really playing catch up to the downside on the IWM. So the IWM's already, it already had this 8 and 20 bearish cross way back here at the very beginning of August the 2nd. So it's been in sort of a slight, a pressured state for over a week already, and we really just added to the selling pressure this week for the IWM. So this is the laggard. Let's pay attention to how this acts here heading into next week. And if we look at the Qs, still holding up the best, still is most resilient. This chart does look sloppy here in the near term, but just on a relative basis, it's still holding up pretty darn close to highs. The 8 and 20 still haven't even curled over. It's still just hanging out right below some of this support in here from late July, early August, right around this 142.50 level. So, again, it certainly does have room to fall. It is in a period of sort of sideways consolidation and a bit of a mess, but on a relative basis, still holding up best. And on the week, it was down just over 1%. So again, you can see above the 8-period moving average here on the weekly chart. So the NASDAQ continues to sort of remain here best in class. It's spent most of its time like that this year. It had, of course, a sharper correction than others throughout June, but it quickly recovered from that. It's back towards highs, and again, had a nice session here on Friday with a 74 basis point move to the upside. So that's the landscape overall. I think we covered everything. Except for breadth, which actually I did want to touch on. So if we look at the SPY, for example, back to here, and we think about breadth, we are seeing now an increased uptick of new 52-week lows. So that's something, I don't have a chart in front of me right now, but if you look at the number of stocks hitting new 52-week lows, you're seeing that really start to ramp to the upside. You're starting to see the 52-week highs dry up a little bit. So we are seeing a little bit more divergence, a little more softness in breadth than we have seen in quite a while. So some of the readings that I look at are starting to really sort of broaden out there on the weaker side. Something to pay attention to, something to take note of. In the very short term, we do have some metrics that are saying we're a bit oversold, or at those extreme sort of oversold bounce conditions. Take a look at the number of stocks below a 10 SMA in the S&P 500, for example. You can see we're at the -2 standard deviation zone, more or less around 20%. So there are some short-term sort of capitulation signals out there, but again, that can continue to push into more oversold conditions. So be aware of that. If you're playing for a bounce here, I don't think it's completely unreasonable, but I certainly wouldn't want to be all in playing for a bounce. I'd want to be, parsing out that exposure and just, paying attention to risk management. So, I think that pretty much covers the market environment. We looked at the VIX, we looked at the major averages, we've talked about breadth. Let's get into some of the other major markets here. We'll look at TLT next, which saw a nice move to the upside this week, 1.2%. If we go back to the daily chart, you can see the 8 and 20 are up, getting some nice buy volume coming in on the upside. TLT is a market where long, we got involved in this position. It's actually right before I think I took off for a little vacation right here on this engulfing bar. I think was the first was our entry. So we're hanging on to this position now. We've trailed up our stop a bit, but I like the look of this. While the market, while risk equities, are selling off and under pressure, we're getting a little bit of a flight here back into bonds. So I like the formation. I like this momentum that it's building. See if we can get back up here, maybe fill this gap, retest these highs in June. Doesn't have to get there, but we'll see if it does. So TLT, short term, I like it. What else? Gold, we'll look at the metals here, also doing very well recently, kind of these safety haven trades as we start to move out of equities, go into some of the treasuries, back into the metals. Gold, nice buy volume over the past 4 days. You can see we're very quickly back towards the May and June highs. Really didn't pique my interest at all in gold as we were back over here, just kind of dismissed it altogether, and it's had a nice move. So congrats to anybody that caught that. You can see back to these recent highs here. So gold short-term trend is higher. Silver, very similar situation. Got some buy volume coming in recently. This trend is continuing higher. Had a little bit of a pullback to start the month of August, and now it's back to the upside. 8 and 20 period kind of sharply moving higher. So gold, silver, treasuries, all sort of, or bonds, all sort of in those short-term trends accelerating higher this week. USO continues to kind of hang on here in this uptrend. Take a look at the trend here starting from the lows back in at the end of June. Continues to hold in here. 8 and 20 period still up. It's consolidating. It's at this trend line. Let's see if it holds. Bulls are in control so long as we're above this line. If we start to break down, then that could spell a little bit of concern there in the near term at least. Volume pretty much dried up here over the past week or so. So not a lot of excitement, just kind of hanging out sideways. So something to pay attention to if you're not involved in it. You want to get back involved in it on a breakout, say above these recent highs, above 1020. I could see that happening. If it starts to lose these lows here into next week, I'd want to be a little cautious there on USO. If we look at natural gas, also having a nice week, up 7%. So very impressive week, all things considered. If we zoom out, you can see this yellow line, this trend line is the lows from the beginning of the year. It's been about that 650 level. I've been talking about that 650 level, and we're back above it. I'd like UNG as long as we're above the lows to start the year, which were right in here at March. So as long as we're above 650, I sort of like it. It looks like we're trying to carve out some type of bottom. At least that's my belief at this point. It could be messy. I'm not saying it's an easy trade. We could come back down and still kind of whip along sideways, but the longer it stays above here, the more I like it. So UNG, no position right now, but I'm paying attention to it. And I think that's everything. So let's look at some sector analysis to finish off the video. Safety haven trade continues here. Utilities, not the strongest session here on Friday, but holding up, all things considered. It was flat on the week. You can see it had a nice week last week, up 1.4%. So utilities, XLU, back to these recent highs of June, looks pretty good. Staples also kind of moving sideways here, so not as high up, not on a relative basis, not back to those June highs just yet, but still hanging in there. Ended up flat on the week, which on a relative basis is actually, again, a pretty good outperformer for the week. So staples, utilities, technology is actually up there. This chart looks very similar to the Qs, but XLK holding up strong. And finally, financials, which they did get hit pretty good this week, down minus 2.6%, but I'm still paying attention to them. I wouldn't write them off just yet, because take a look at where they're selling off into. These are the July lows here, and I think if the financials can start to stabilize around this level, as long as we don't come, breaking through with some authority below this pivot low from July, then I think it's something to pay attention to. It's still, more or less a leadership group from a longer, bigger picture sort of perspective. So paying attention to XLF, not jumping in there yet, but just paying attention to see how it reacts at this prior support. On the downside, energy. So energy, I still sort of am in the camp here that we are going to attempt to sort of bottom out here, but it's not going to be an easy trade. We got involved in this back, I actually don't have the exact, before I left, we got involved in energy, and we did get some movement to the upside, but we ultimately got stopped out probably on this day here. I think it was on the 3rd, for a small loss. So I know, we took a stab at this, didn't end up getting to our first target. We ended up taking the loss in it. So no longer in XLE. And of course, now it's already almost back to these lows. So I'm paying attention to it again. I still think it could be just moving sideways, messy, frustrating most. If it is actually trying to carve out a bottom, if it wants to continue in this downtrend, then, of course, it would seem to be in a void, but there are some divergences there, printing on some of those larger time frames. And then finally, IBB, again, this one in sort of the penalty box for me, the way it kind of ripped below this support, all of this consolidation from July, the fact that we broke below it with some authority. Now, if this turns out to be some type of capitulation, if next week we come ripping back up through this 310 level, with the same speed that we sort of broke below it on Thursday, that would change my outlook on this of being maybe a false breakdown or just this final capitulation move after it's basically been moving, selling off from this almost 330 tag all the way down to 305. So if we can get back above this 310 level quickly, I would I would be interested in that. Otherwise, I don't like IBB here so long as we stay below this 310 level. So that is the last that I had to go over. Thanks so much for watching. Hopefully you guys survive the sell-off this week. If you're new here, we do these videos a couple of times a week, so long as I'm not on vacation, which I don't have any other planned for a while. So do consider subscribing if you like these videos. Thanks again for watching, and talk to you again soon.